You might find this hard to believe, but this is not a simulation. Exactly $38 trillion. As of December 2025, US government debt has shattered all-time records, reaching $38.5 trillion. Now, with this massive bill sitting on the table, isn't it time we ask the real question, who is actually paying for this? Is it the government or is it you? In this video, you will learn the naked truth about soft default, the hidden tax, the broken compass, the captive buyer, the Cantillon Effect, the wealth transfer, and the final destination, CBDCs, and the cashless society. If you were to walk into Times Square right now and look at that famous debt clock, you'd see a number that defies human logic. For years, politicians and mainstream economists told us that budget deficits were manageable and that we actually owe the money to ourselves. They even spun a fairy tale that as long as the economy grows, debt is just a number, like a high score on a video game leaderboard. In short, they've been lying to us for years. But as of 2024 and 2025, the math has changed ruthlessly. Debt is no longer a passive figure. It has transformed into a predator that is eating the American budget and your tax dollars alive. Today, for the first time in US history, the federal government is spending more on interest payments than on national defense. Think about that. We are spending more to pay for the mistakes of the past than we are to build the future or protect the country. Today at FinVİsion Global, we will break down exactly how this massive debt will be erased and what will happen to your savings in the process. Part 1. The feedback loop, the debt spiral. If you're an average person living in a normal household and your debts exceed your height, what do? You cut spending, you stop eating out, or you cancel your subscriptions. But a government is not a household. A massive portion of the US budget consists of mandatory items like Social Security and Medicare. These are political promises made to an aging population, and breaking them is political suicide. The government cannot cut spending because the economy has become addicted to this expenditure. So what do? They constantly issue new debt just to pay the interest on the old debt. It's exactly like taking a cash advance from one credit card just to pay the minimum balance on another. They are trying to cover debt with more debt. In mathematics, this is a disaster cycle called exponential growth. The interest bill alone is approaching $1 trillion a year. This money doesn't go toward building roads or schools. It flows only into the interest of a debt where the principal can't even be touched. So, is there a way out? There are three options on the table: austerity, doubling taxes, and cutting spending by 50%. This would instantly plunge the economy into a Great Depression. Default, bankruptcy, saying I'm not paying. This would be like detonating a nuclear bomb in the global financial system. Soft default, the path of least resistance that states have chosen throughout history. Part 2. Soft default, the hidden tax. A soft default is this: you don't reject the debt. You don't say, I don't owe it. On the contrary, you swear to pay back every single cent. However, you pay that money back with a currency that has much lower purchasing power than when you borrowed it. You bridge the gap by printing money. This isn't a conspiracy theory. It is the official, yet hidden, fiscal policy of the United States government. The math is simple. If the government owes $30 trillion and inflation is at 5%, the real value of that debt melts away by 5% every year on its own, without a single tax hike or cutting a single social program. The government erases $1.5 trillion of debt on paper in 1 year just through inflation. Bondholders get their money back, but that money can no longer buy the same amount of bread, housing, or fuel as it did 10 years ago. The amount is the same, but the value has vanished. This is a massive silent transfer of wealth from savers to the state. Before we move on, I want to ask you, who do you think bank is really paying for this massive debt? Is it the salaried workers or those who make money from money? Let's discuss this in the comments. Also, if you subscribe to our channel and like this video, we can grow as a family to bring financial truth to more people.
Part 3. Manipulation tools, CPI and financial repression. The government uses two major invisible tools to manage this debt erasing process. 1. The broken compass, CPI manipulation. If you've promised inflation adjusted raises to the public and retirees, the easiest way to protect the budget is to report inflation lower than it actually is. They do this through statistical tricks like hedonic adjustments and the substitution method. For example, if the price of steak skyrockets, the government assumes you'll eat a hamburger instead and updates the inflation basket accordingly. They market your decline in standard of living as low inflation. If we used the calculation methodology of the 1980s today, we would be seeing at least double the official inflation figures. 2. The captive buyer financial repression. Normally, no one would want to lend money to someone so reckless and in debt. Investors would say, "You're a risk, give me 10% interest." But the US cannot afford to pay that high interest. The solution, forcing banks, insurance companies, and pension funds to buy treasury bonds through regulations like Dodd-Frank. These institutions buy government bonds not because they are profitable, but because they are legally required to hold high-quality liquid assets. In other words, your retirement premiums are held captive to finance the state's debt spiral. Part 4. The Cantillon Effect, wealth transfer. This money printing process doesn't affect everyone equally. There is a truth observed by 18th century economist Richard Cantillon. New money enriches the people at the point where it enters the economy, while it impoverishes those who receive it last. When the Fed prints money, this fresh cash goes first to big banks and financial institutions. They invest this money in stocks, real estate, and tech companies before prices have even risen. By the time that money reaches the average worker's salary or a retiree's pocket, food and rent prices have already soared. The rich get the money before inflation and inflate their assets. The poor get the money after inflation has made everything expensive. This is the fundamental reason for the K-shaped economy we've seen over the last 15 years. While the top 10% multiply their wealth, the purchasing power of the remaining 90% collapses. The national debt is essentially being paid off by the liquidation of the American middle class. Part 5. The final tool, CBDCs and the cashless society. The most dangerous tool in the government's arsenal, which hasn't been fully deployed yet, is the central bank digital currency, CBDC. Right now, the physical cash in your pocket is your exit ticket from the system. If you think the value of your money in the bank will melt away, you can withdraw cash and put it under your mattress. But if the dollar becomes entirely digital, the Fed gains total and absolute control over you. They can put an expiration date on your money. For example, spend this in 30 days to stimulate the economy, or it disappears. They can apply negative interest rates to force you to spend. They can restrict your spending based on your social credit score. CBDCs are the ultimate solution to the debt problem, an absolute financial cage that leaves nowhere to run within the system. The transition to a cashless society is not a convenience. It is the final stage of this great debt transfer. Closing, the survival strategy. In conclusion, the US government will never openly admit that it is bankrupt. Instead, it will create inflation. It will pay the debt by stealing the value of the money right out of the pockets of citizens who aren't even aware of it. Over the next decade, they will quietly erode this $38 trillion by keeping interest rates below the real rate of inflation. In this new world, the traditional strategy of saving cash is now financial suicide. The winners will be those who
own scarce assets that governments cannot print and politicians cannot multiply with a signature: gold, silver, real estate, and limited supply digital assets. So, how are you protecting yourself against this silent eraser? Do you trust gold more or next generation digital assets in your portfolio? Let's meet in the comments. I'll be reading and responding to every single one. In the next video, we will discuss how the American government confiscated the public's gold in 1933 and what that history means for today's digital assets. Don't forget to subscribe and turn on notifications to stay informed. At FinVİsion Global, we will continue to see the truth and foresee the future. Thanks for watching, and I'll see you in the next one.